Our data sources are public. We do all the grunt work of collecting it, putting it into a good format, and then doing a bunch of data science on it to provide this information so we can be your binoculars so you can make informed decisions about where you put your money.
Hi, I'm Ross Gates from Alphagrowth. We're here at Block World 2018, and I'm here with Christopher from, where are you at?
So I'm with Rootmont Research.
Rootmont Research. And what kind of platform is that?
So we do quantitative research reports on cryptocurrencies, and it's basically filling a gap that we saw as personal investors in having real information about how currencies are doing.
So you give investors insights. You don't tell them what to buy,
no,
but you let them see what the market's doing through a bunch of really technical analysis. And
right.
You're the tech guy.
Yeah. Well, I have a background in rapid prototyping and machine learning, and so it was we realized that there's a lot of hand waviness and a lot of the
as there is in every business.
Of course. But if you're managing a lot of people's money, and it's other people's money, you want to manage your risk. I mean, there's a whole science that like the old financial world has established for this, like risk-adjusted analysis. Sure, you made returns, but how much did you risk in doing that, right? Maybe if you would have bought at a slightly different time, you would have actually lost all your money.
Yeah.
Right, and there's lots of people for whom that happens.
So you help solve those problems with technology. Can you talk about what your platform has in terms of technology that others don't?
Well, yeah, it's mostly around the data science, and so for example, there's this thing called portfolio theory statistics, and basically it's kind of a mouthful, but what that means is that you've got each currency exists in a context of its peers, and so when people say like the market, what are they really talking about? Is it like the S&P 500? Right, it's a bunch of companies that get grouped together because they behave similarly, they're in a similar market.
And all these cryptocurrencies are linked, because you kind of see Bitcoin trending and everything follows.
Exactly.
Gotcha.
So an example of a statistic that's relevant here is they call it upside or downside capture ratio. So let's say the market is swelling, right? You're in a bull market.
Yep.
Well, how much for each given currency, maybe it moves with the market, maybe it kind of lags behind it, maybe it shoots above it, right? And typically they behave differently for the up markets and down markets. So what you ideally want, right, is one that when there's a bull market, it's way above the market, and when it's a bear market, it kind of stays afloat somehow.
Yeah.
And that doesn't happen very often, obviously, but you have to do the data science to find that out. And it's, really, all of our data sources are public, right? It's just that we do all the grunt work of collecting it, putting it into a good format, and then doing a bunch of data science on it to provide this information so we can be your binoculars so you can make informed decisions about where you put your money.
So you're using different analysis techniques, and one of them is looking at Metcalfes Law. Can you talk about how that relates specifically to crypto and why it's valuable?
Yeah, so for me personally as a data scientist, I find this really fascinating. So there's this thing called Metcalfes Law, which is, in the simplest form, it's the idea that the value of the network is not based on the number of participants directly, it's the number of connections, the number of possible connections
Gotcha.
in it. So if we have a telephone network, if it's just you and me who have telephones, there's only one possible connection, but we add another person, now there's two more connections. We add another connection, there's three more.
So you're saying Facebook doesn't need more users, it just needs to incentivize all of its users to make more friends, and then it becomes more valuable?
Well, that's one way of thinking about it. It's more that the value of Facebook as another user joins, now that user can connect with all the existing users. So the more existing users to connect with there are, then the more value each additional user is. So that's why it's not a linear thing. It's not that you double the number of members, then now you've got double the value. You've got more than double.
Gotcha. And how does that relate to cryptocurrency trading?
So you really want to view, in this case, cryptocurrencies as a network, right? It's once you're in that crypto, or once you're holding it, then there's all these people you can do business with, the people who accept it and the people who will pay you in it.
Gotcha.
Right, and so now the thing is, there's this idea. Right, we talked about Metcalfes Law, but there's a generalized Metcalfes Law, because it turns out not all connections are equally valuable, right? Just because you connect to Facebook doesn't mean you're going to suddenly be friends with everybody in India, right? And somebody in India isn't necessarily friends with everybody in Russia. It's like there's so sometimes it's not exactly a square, and so it turns out that you can figure out what's the best fit, right? What is the real relationship between the number of users and the price? And this turns out to be, in some cases, a very powerful signal where you can know if you're watching the blockchain, if if you're able to see the number of transactions that are happening daily, then you can now start to make very informed decisions about how the price is going to
value of the individual users.
Right.
Okay.
Because and I'll give you simple, like, extreme examples. On one side, there are some cryptos that if you watch what's happening on chain, this correlates with the price by 99%. Right? This is an extreme case. On the other side, sometimes there's actually negative correlations. So for some reason, whenever more people start using it, the price goes down, and whenever less people, right?
Well, is that like CryptoKitties, where like, the cost goes up so much that nobody wants to use it anymore?
Well, I mean, that's an interesting proposal. Now, CryptoKitties are not a fungible asset, right? So we're not, but that sort of mechanism that you're discussing could be what's going on. Now, basically, the point is we can speculate about this all day long, but what really matters is what's happening.
Gotcha.
And that's what the data science gives you. It tells you what's happening. It doesn't tell you what to think. We're not here as propagandists. We're not shilling any particular coin. We want to just give you a clear view into it, and we think that's valuable.
Gotcha. So you're using Metcalfes Law, you're going back through all the data in the past, you're figuring out what those correlations were by how many people were using it at that time. You can get a 99% correlation, which is a confidence of what's going to happen next.
Right.
And then you apply the same model to each individual coin, or to the crypto industry as a whole, or how does that work?
Well, yeah, so it's a good question. So this, we make a separate model for each currency, because each currency has, it's like, for example, think about Ethereum. Ethereum doesn't have a high Metcalfe exponent because a lot of the on-chain transactions for Ethereum have little to do with Ether
itself.
Right? It's people trading ERC20 tokens, right, or using dApps, right? So they're not necessarily using Ethereum proper; they're using something on top of it.
Gotcha.
And so, consequently, there's still a good correlation with the price, but it's not as much of an amplified. It's like more of a dampened relationship. And so, and so on the other side, some of these altcoins, like, you can basically, there's only a few people trading it. You can tell when they move their coins on the exchange because, like, you see an on-chain transaction, and that tells you what's going on. So when I talk about the 99% correlation, that's one model for one currency. We train a different model for a different currency, and because they're all different, and so what one additional user means in one network is different from in another network.
Gotcha. So what stage you at right now with all of your development and technology? It's all in place? You're still creating it, or what's next?
Well, nothing's ever really done, but we've just launched our beta less than a month ago, and so we have a product. It's adding value to our customers, and we're constantly building and taking feedback, and we believe we have something really unique.
So feedback, how can people give you feedback, or what can the community do to help and make this succeed?
Well, go sign up at rootmont.com. We can give you a free trial or a demo and show you what we've got. We also do custom due diligence. So, this was, we're investors ourselves. We dig into these things, look at the team, read their white paper, look at their business model. I'll read their code, and
So if you have a project you're interested in, you can reach out to Christopher and he will do some custom due diligence for you. That sounds like a great deal.
Yeah.
And then he'll add it to his platform and figure out how it'll take off.
Yeah.
Cool. This has been great, Christopher.
Yeah, thank you so much.
You're welcome.